Good morning, ladies and gentlemen. This is Butch Shorak, Options University. It's Monday, May 13th, 2013, and welcome to Market Forecast. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we're not a service that tells you what to trade. We're not implying or guaranteeing any profit. As always, do not trade with money that you cannot afford to lose. As we take a look at the indexes for the last week, looking at the Dow, the NASDAQ, the S&P 500, the Russell 2000, we see that as a percentage change. We see that the Dow is up 1% for the week, NASDAQ up 1.7%, Russell up 2.2%, S&P up 1.2%, giving us year-to-date numbers that are truly amazing at this particular point. Up 15% on the Dow, up almost 15% on the Russell, up almost 15% on the S&P, and the NASDAQ lagging at 13.8%. Quite a run as we go through the month of May. Economic announcements coming up for the next week. Let's take a look at those, and we see that on Monday we have very little happening that's of much significance on Monday. We do have retail sales at 8:30. We have business inventories at 10 o'clock, and both of those probably will not move the market with any great respect. Import export prices taking place before the market opens on Tuesday. And then as we go into Wednesday, we see the PPI is at 8:30, Empire State Manufacturing Survey is at 8:30, and Housing and Market Index has taken place at 10 o'clock. As we go into Thursday, of course, we have our jobless claims at 8:30, looking at some more housing starts, the CPI, which certainly can move the market, and the Philly Fed Survey at 10 a.m. Consumer sentiment's taking place Friday morning at 9:55, and economic leading indicators coming in at 10 o'clock. So as we go into the end of the week, we certainly have a lot more information that's taking place at the beginning of the week. Looking at the SPX for the past week, what was it that we saw? Well, what we saw was a continuation of the uptrend. We saw our big breakout, and then it continued on as we consolidated the last 3 days, closing the week out at almost the high of the week. Certainly a nice strong showing for the week, as we saw those numbers show us when we looked at all of our respective indexes. Looking at the SPX, we see that on Monday we ended up with a higher high, Tuesday a higher high, Wednesday a higher high, and then ending up with consolidation going on to Thursday and Friday. We are definitely in an uptrend. There's no doubt about that. As we look at a little larger time span, we see that we have continued that uptrend as we go into total blue sky with absolutely no restrictions above us as to where we're going. Let's take a look at the Dow, see that as we're at all-time high in the Dow, broke through that 15,000 mark. Are we a bit overbought up here? Is the air getting a little thin up here? Well, there's no question that in the short term we may be a little overbought, but the market looks like it's heading up to new highs and could be a banner year. Beware of the month of May, but things certainly look healthy. Looking at the NASDAQ, can you call that a breakout, as we saw this breakout and head into nice blue skies? We tend to not leave these gaps behind us, so at some point that'll close, and we're a long way away from our moving averages, but looking pretty healthy and pretty strong as we look at the NASDAQ at this point. Time for a pullback? Well, you know, there's always time for a pullback when you have moves like this. Where we expect to pull back, no big major pullbacks. You see that what's happened in the past is we never even got down to the 200-day moving average on the Russell. As we see again, blue sky out of the Russell 2000, as all the markets and all the world is healthy at this particular point. Looking at the VIX, it is exactly where we expect it to, down around 12.5, expecting the VIX to sit there exactly where it belongs. As we look at the bond market, let's take a look at the bond market. We see that with our TLT, we see that our bonds have pulled back below the 200-day moving average, pulled back below all of our moving averages, as the bonds seem to be in a bit of a downtrend. Let's take a look next at that fair haven of gold and see exactly what's happened with gold. We had our little rise up. We consolidated. Now we've got a little bit of a pullback here in gold, sitting around that 139 area. So gold basically pulled back for the week as the market head up. Take a look at what kind of volume we have. Well, we're not showing any great volume as we continue with this uptrend. And so while the market is heading up and the amount of participation in this rally is not as strong as one might like to see in a true bullish market. All right, looking at the financials, it did exactly what we would expect them to do, heading up with the overall market. XLF certainly a bit away from the 30-day moving average, waiting for an entry or a new entry. As we see, we have broken out and still have that gap sitting behind us. Looking at the oil, we see that oil has had a little bit of a pop-up this week as oil showed a little bit of strength after those previous lows which took place around April 15th. So with that fact, we're moving forward. And for those of you that are gold members, stick around. We'll look at our stocks to watch for the week as the market seems to be falling straight up. And we're showing great strength in the market, and the bullish trend continues. For those of you that would like to see more free videos from Options University, go to optionsuniversity.com/free gold. And to those of you that are watching this every week, we'll look for you again next week. This is Butch Shorak, Options University, Monday, May 13th, 2013. Thank you for being here.